Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Crazy price action we're seeing across almost every asset class today. We're going to try to cover everything as we've got gold hitting new all-time highs, crude oil back above $85 when you're looking at WTI, Brent crude, a big benchmark for Europe, way beyond $85. S&P is, still in the grand scheme of things, near all-time highs, but starting to see a little fear. We'll talk S&P as well as VIX, and even throw the U.S. dollar in there for good measure, because the entire economy of assets seeing a lot of different movement and some crazy correlations as well. But let's start with the gold piece, as we have another new high. And in intraday trade, gold did get right up to 2,300 at the time of this recording, did not trade beyond 2,300, but right there, especially at this pace where we're seeing gold move in chunks of 20, 30 bucks, is right there close to 2,300 and spending no time at 2,100 or 2,200 as the appreciation in the precious metals continues. And yeah, in just the last week, right there, about $100 rally. And like I say, it seems like every time I go to the platform, I'm seeing, a net change in gold that is 15, 20, 25, 30 bucks, which we haven't seen in a while. I mean, you look at the rest of the price action for the last couple of years, and you're seeing a couple of things, right? It's topping out at around 2,100. You're seeing a lot of back and forth, and gold traders out there will remember that we were stuck, especially throughout 2023, in a lot of weeks where seeing a $5 to $10 move in gold on a daily basis, that was all you could really get, and the occasional big movement. But now, wow, a lot of volatility entering this gold market, and a lot of it seems to be pressured by the geopolitical tensions, and we'll get to some of it that more directly might speak to the crude oil market in just a second. But this does feel like one of those instances of you have a market that could be gold, could be crypto, could be anything really, especially single primary markets like a gold or a crude oil or a Bitcoin that aren't diversified like an S&P 500 is, with many more moving parts. But you have this market that's in a little bit of uncharted territory, and the price action, it really becomes the mover itself in these scenarios, and it doesn't necessarily have to make sense that, gold supply and demand, and they're coming together for whatever reason. We're just on a crazy run here in gold, and we'll see if 2,300 is that high. Previously it was 2,100, blew right through 2,200, or if next week we could very easily be talking 2,400. Only time will tell, as that market just seeing a lot of volatility in its own right, regardless of what's going on in the broad economy. And we'll keep that in mind, because we're going to come back to that when we talk about stocks in U.S. dollar in just a second, the correlation between these gold all-time highs and those other markets, because it's not what you're used to seeing. But let's move on to crude oil first, because we're seeing commodities in general get a bid tone to them. Even natural gas, can you believe it? Natural gas also bouncing in recent days. But the crude oil piece is more directly tied to the fact that you have the Russian-Ukrainian war. A big piece of it has been the targeting of oil production and refineries in Russia, and how that might affect supply, and even affecting, here we're looking at the WTI crude oil metric, which is the price of crude here in the U.S., West Texas Intermediate crude. Even this market up beyond $85, and that's a new high since October. And you'll remember, of course, you remember the spike to triple digits when the Russian-Ukrainian war was first breaking out a couple of years ago. But the highs in this crude oil market for the last year or so of trading are just up there in the $90 to $95 range, and we're now less than $10 away from that part of the historic price action. But also, this market is seeing increased demand, or maybe not necessarily increased, but higher than expected demand from U.S. and China. And the expectation maybe in the last 6 to 12 months was for that demand to diminish. You've heard a lot about how interest rates are likely to go lower, inflation is heading lower. Everybody's expecting the economies globally that saw such a boom in 2021 and 22 and 23 to finally take a breather here in 24. And we haven't been getting that so much. And so the fear around supply is also teaming with the expectation that maybe demand will stay high. And even though the U.S. has increased production, that might not be enough to feed that demand, especially if more Russian oil production goes offline because of the war that's going on. But anyways, let's move on to the stock piece of it, because we are finally seeing a little bit of bearishness, a little bit of fear play out in the S&P, down about 1% in the same time that we're seeing gold and crude oil make some new highs. That being said, you look at this chart for the last year or so, and you've still got an S&P that's above 5,200, a rounding error essentially from all-time highs. The really intriguing piece will be where we go from here, because I want to take a look at the volatility index around the S&P 500. And for those who don't know, the VIX is an index that takes option prices on the S&P 500 and spits out essentially what options are saying the market is capable of doing. And so a price of 15 there equates to around a 15% implied volatility in the S&P, which means that options traders are thinking that a plus or minus 15% move in the S&P for the next year is totally in the realm of possibilities, where you go back a week ago and this VIX metric was down around 13%. And that might not seem like a big jump, going from a projected 13% up or down move to 15% up or down move. But that shift has happened in effectively 2 or 3 trading days. And anyone who knows anything about VIX knows that this market can really rip, which is to say fear can enter the stock market very, very quickly. You're starting to see a little bit of it. It's not at, very crazy historic levels quite yet. But it's been climbing, and really that 15 level, as you can see for the year so far, has been the high in VIX. It'll be really interesting to see if the S&P falls another day or two. We might be at a new high year to date for stock market fear, and you might start to see some bigger moves in that S&P 500. What'll be really interesting, though, and this is where we'll conclude today's story, is how this will relate to U.S. dollar and all the other markets. Because I alluded to this earlier, the correlation between gold and U.S. dollar, or gold and U.S. interest rates, or all three of those markets and the stock market, has been so different recently than what you would have read about in a textbook or expected on a theoretical level, because you have the U.S. dollar actually pretty close to highs itself. And you might say, well, how can gold and crude oil, these two commodities priced in U.S. dollar that are usually negatively correlated, inverses of U.S. dollar, how can all three of them be at recent highs at the same time? And this is where we're getting that correlation breakdown, a little bit of that wonkiness, because we do have U.S. interest rates are also at recent highs. They're not at highs for the last several years, but they're getting back close to them. The U.S. 10-year is back up to 4.3, 4.4%, and the high for that was just shy of 5%, so not too far there. And again, historically, gold and interest rates not moving in the same direction. So it'll be really interesting to see if, gold and crude oil take another leg higher. At some point, does the US dollar move lower, or can they continue to move in essentially the same direction? Or if gold and crude oil finally release, will this US dollar take another leg higher itself? For the time being, all these markets kind of moving on their own amid just general kind of fear and volatility entering each asset class. But we're getting some pretty crazy price extremes and starting to get some big moves in gold, crude, even the S&P 500, as well as forex markets.